I'll be sharing on how you can use MQTrader system to identify good trading opportunities systematically. Okay, the keyword is systematically. Okay, so before I start, disclaimer here, the content and the stock that I use today is only for educational and informational purpose. There's no investment or trading recommendations. So you need to do your own research to analyze your own decisions and also analyze your own risk level. Okay. And we will have a Q&A session after our guest speaker, after both sessions. There's 2 speakers today. And then after 2 speakers' speech, we will have a Q&A session. So do use this link to send us your feedbacks or inquiries or anything anonymously. So we won't know who you are. So don't be shy to ask any questions. We'll try to answer them by the end of the webinar. Good shot. We've been doing a lot of webinars nowadays. Yeah, so do take a screenshot here to send us your inquiries at any point of the workshop. Okay, so I believe everyone is almost done. You can also use the code to log into Slido using this page. Okay, yeah? Everyone done? Okay, thank you for your response. So now, today my content, my part, I will break into 4 parts. I will brief you about who we are, what we do about MQTrader. Then I will go into the main theme today, which is the 4 steps to identify good opportunities. Then we'll do case study, live demo using our MQTrader system. And also I will brief you about MQ benefits that you can get with us if you open a trading account with our selected partners. Selected at the time. Okay, so about MQTrader. MQTrader full name is Malaysia Quantitative Trader Group. The keyword is quantitative. Okay? Okay. Yeah. So the keyword is quantitative. We use quantitative data to do our analysis to collect large data that is only available to institutions. And then we compile it, make it into a system, what we call MQTrader stock analysis tool. And we've made it available for our MQ members for free. Okay, so with this tool, we seek to empower our members to make quicker decisions and with greater confidence. And this is a brief screen on MQTrader. Later, I'll show you each of the screens itself. Basically, we have compiled the indicators into fundamental ratings, MQ technical ratings, backtest ratings, and even we have the signals itself. So you can use this for free as an MQ members. And if you're interested to know more about how you can open an account with our selected advertiser, you can visit our booth later, and then you can understand better on the products that they produce, that they provide. Okay, so after all the introduction, let's go into the 4 steps of how you can identify good trading opportunities, especially using our MQTrader system to simplify things for you. So, can I have a quick brief hands up? Do you think trading is gambling? Do you think trading is gambling? If you think trading is gambling, can you put up your hand?
Looking at the cash space, I don't think so.
Okay, yeah. So very good. No one put up your hand. So everyone thinks that trading is not gambling, right? Yeah. So this is our highlight today as well. Trading is not gambling. There's strategy for trading. If not, how can all the traders make money? Some traders even make it a full-time job for them. So there must be a strategy for them. So trading is not gambling. Okay. And this is the 4 steps that we're going into today. You can take a photo now. I will keep showing these slides on and off in this session. But you can remember the acronym OFTS, overall trend, fundamental analysis. Then you go to technical analysis, and then you do signals and back testing using our MQTrader system. Okay, remember OFTX. So the first one, overall trend. The overall trend, you can actually go through news or various social media platforms to get your information about the stock and also the industry itself. So overall trends include news, opinions, or even speculations by analysts, they come up with reports. So you can look at all these reports. Even you can look at i3 Investor, one of our media partners, where they have a lot of stock discussions around. They have compiled a lot of information about the stock as well. So you can have a look as well. This screenshot is taken from yesterday. So you see a lot of hot stock on the spot, like Bufu, Dnex. Heikin is also one of the stocks that is highly discussed. So you can have a look on i3 Investor. And about ourselves, we do produce information on Facebook or Instagram. You can follow us on our Facebook and Instagram. We do daily market updates. We do IPO information. We share our IPO information so that you can look at one glance. Okay. So this is how you can actually get all the information. And I'll show you live demo later on i3 Investor, how to get all the information on i3. So the second step is to do your fundamental analysis, which means you need to read all the reports, you need to do the financial statements, all the numbers and all that. Okay, you need to calculate all the ratios. But what's the trick here is MQ Trader has compiled all the data for you. We have made into MQ fundamental ratings. Okay, so we have include list of details. If you want to go into the details, you can use the list. If not, you can just refer to the ratings itself. So for a good stock, we will normally go for benchmark of 2.5 and above to consider a fundamentally okay company. For good, we will go for 4 and above. So for Hong Leong Bank, for this example, is good fundamentally. Okay. So here's, you can click on the icon here, the small I there. You can click the small I there to know more information if you want to know how we actually set up criteria, whether it's pass or fail. You want to know why we pass it, why we fail it, you can have a look at that. So this is our MQ Trader own strategy and own way of analyzing. Okay. So again, fundamental ratings, we have a benchmark of 2.5. And so this is considered a good company, good fundamental company. And if you click into the hyperlink just now, okay, the hyperlink here, this one, then it will lead you to this, where you get information, details information. So at first glance, you can see Hong Leong Bank is actually growing in revenue, growing in profit. You can also look at the tables here for numbers if you are a number person. This again considered a good company. An example of how it's not so good company. I wouldn't say it's bad because you will never know, sometimes the stock will turn to be good in the future. So for now, this stock is what we would want to avoid. This is not so good or not okay for us in this strategy. Okay. So basically, we are trying to save our capital, to reduce risk. So we want to avoid this kind of counters. Another way you can search for fundamental analysis in MQ Trader is use the price target research. In general, you want to have, this is a compilation of all the analysts. They come up with a price target. So we compile them into this table and then we show you from. Okay, so in general, you want to have price target that is increasing, meaning that the price is increasing, the expectation is increasing. Okay, and you can see the average there. We want to have a 3-star and above to consider a good price target research counter. Okay. To get this, you also need to consider whether it is actively involved in the analyst report. Basically, is it covered by the analyst enough? So if it's not a hot stock, the analyst will cover it. If it's not a good stock, then most of the analysts will want to write about it as well, right? You want to write about that stock and then publish. So yeah, so these are all the information that will compile for you, and then you can just refer at the graph and the rating itself. If you want details, you can refer to the table you want. So the third step that you want to do is to do a technical check. So this first 2 steps is for you to screen through to choose which stock. Okay, choose which stock to look at. Then the third step, starting from the third step, you want to see opportunities. You want to try to topic that you need to know. Can I check if any one of you know about this? Trade with the what? Do you guys know? Do you guys heard of any people saying about this? Trade with the yes, trade with the trend. So you want to trade with the trend. Okay, and the whole part of the technical analysis today, we'll be talking about how you can check the trend, how you can check for the good opportunities and good trends. Okay, so again, we have compiled all the indicators for you, and we have made it into our FQ ratings. For good technical ratings, it needs to be 3 and above. Okay, so it means it's in a good trend. Good trend, good stock may not be in good trend, so we need to check whether it's trending now. Okay, this is a good trending stock currently. T-Trans is going up, and also its trend is going up based on the indicators that we found. So here, you can, other than the MQ ratings, you can check on the charts as well, where you can check the trend line. Here, I'm using EMA 90 and also SMA 200. Okay, so can anyone tell me this trend is going up or down? Can it be louder, more confident? Up or down? Okay. Yes, uptrend. It's very obvious. One thing you can look at the graph itself, the pattern is going up in a ladder shape, in a ladder shape. Okay, another thing is we are quant traders, so we want big data as well. We want to have confirmed data. So how we get the confirmed data is the EMA 90 is above SMA 200. The price itself is also above EMA 90. Okay, so this is confirmed a good trend, good uptrending stock. And here's, we also want to check the volumes itself, make sure that there are volume in the trading, basically to check out your liquidity and also to check out how many people actually convert with this trend as well. So the more the better for volume. This is 220 million. So here is a for a good benchmark is 1 million to start with. Okay. So again, uptrend you're going to be right. And here's our FQ strategy on how you can search for trend in terms of short-term trader, mid-term trader, and long-term trader. So you can use these combinations to search out your opportunities of trend. Another way is you can tweak the chart. Okay, you can use shorter time frame, like hourly chart, minutes chart, if you are a short-term trader. So for day trader, is mostly day chart is mostly for mid-term trader and also long-term trader. Day chart, mid-term, and long-term. Okay, for short-term trader, you normally get a minute chart and also hourly chart. So again, uptrend or downtrend?
Downtrend.
Yes, downtrend. It's very obvious. It's going down the ladder. Okay, and also the EMA 90 is below SMA 200. So this is a downtrending stock that we will want to avoid for now based on our strategy. So after all the analysis, we can do our signal to find indications of specific points to enter. Okay, so we have this signal and backtesting step, and we've compiled list of signals, which is actually trading strategies all around the world that is available in Google. You can search for these trading strategies. So we have compiled all these trading strategies using their formulas, and we put it into our signals. So when you click one click only, you get all your buy and sell signals based on the strategies. Okay, and in this presentation, we will be looking at Gapi MMA, MQ volume breakout. This is our own strategy, and then certain strategy. Okay. Any idea why I don't just use one signal? Do you know why I choose 3? No idea. Okay, we are a quant trader, quantitative trader. So we want large data. We compile. It is a collective strategy, what we call collective strategy. So we will try to look at as much strategies as we can, collect as much data as we can. Then only we will make our decisions. We don't base our decisions on one signal or one backtest without that's all. So we base on a few data to compile to make our decisions. So we have chosen 3. 3 is good enough for now for our sharing today. It's short and brief. Okay, so I won't go into other strategies much. You can search it out in our Facebook or even our entry investor, where we share a lot of education and information about all these strategies. So trading signals itself, we have this screener where you can use on MQ Trader. This is a daily signal based on the signals that is generated that day itself. So you can see this is yesterday's result. You can see there's a lot of signals on public bank. So it may be worth of looking at it. You can search for the durations, the signals, even the buy and sell signals will show on this screener as well. Later I'll show you as well during our live demo. So this is how the signals will be on the chart, buy and sell signal. And for backtest feature, we have embedded into this system for free for all our active members. So basically, you just click on the button here and it will show you backtest result. Backtest on the accuracy of the signal, meaning that if the signal show buy, okay, show an up arrow, does it go up? And then if it goes up, based on how many days you actually earn how much return, and success rate, basically how many times you successfully trigger a correct signal. Okay, so this backtest result, it will show you this kind of result. Okay, so for a good backtest result, we would want as many signals to analyze as possible. For different, depends on strategies. Some strategies have very few signals. So those with very few signals, 10 to 15 is good enough. Like turtle strategy, they don't come up with a lot of signals. The signals that have a lot is EMA 5, crossover EMA 20, that will be a lot of signals. So that one we need more data. But for more, I would say more not so sensitive, price sensitive data, then you can go for lesser signals. So it depends on the signals that you choose. But in general, rules of thumb, it is 10 to 15 should be enough for you to see whether this backtest result is good or not. Okay. So once we are satisfied with the backtest data, then we can look at the ratings. For a good backtest rating, we will want a 2.5 number as a benchmark. And then with this rating is actually considered a good rating. Once it's considered a good rating, then we can see at which day it has the highest success rate. So for this stock with this trading strategy, it has the highest success rate on T5, which is the 5th day after the signal. So when the signal appears, it's T0, then the next day is T1. So 5 days after the signal appears, it has 81 success rate of the signal. The price actually goes above the signal price. Okay, and then you can see the return here as well. So these are basically the 4 types that you can choose. They can use with MQ Trader to identify good trading opportunities. So for backtest credit, it's free, but one backtest requires one backtest credit. Yeah, one backtest credit means every account you have at least 5 backtest credit. For MQ members who link your account, link your trading account with MQ account, then you can up your core packages to standard, then you can get 10 backtest credit. This credit is actually refresh daily. So even if you are here, you can just do your backtest daily, use finish just use the next day, wait until the next day, and then you will generate some. Okay, so if you want to up your package, you just need to generate more MQ points in your trading account. How you generate MQ points is by trading in your trading account, one. Second way is by attending our campaigns and also events where we give out MQ points. When you get MQ points, then you can, it's considered as generating MQ points as well. Okay, so there's a few ways that you can do. You don't have to pay anything. That's the 2 ways that you need. You just need to do to generate MQ points. And speaking about MQ points, today actually we are having a check-in rewards, 300 MQ points check-in rewards for free for all MQ members. So if you are an MQ members and you have linked your trading account to MQ Trader account, do check it out. Okay. How you do it is you just take a picture on this event, any part of the picture also can. Then you post it in your Facebook or Instagram, set it public because then you can see it. Okay, set it public, and then you tag us and WhatsApp us in the dedicated WhatsApp group we have for you. And that's all. So if you're wearing, I think no one is wearing our t-shirt, only Mr. Lim do so. So if you're wearing our t-shirt or if you are having our MQ merchandise, you can can take a picture of your merchandise or also any part of the event. Then it's also considered you can get an extra 200 points. Of this 300 points, total 500. Then you can up your package as well for free. Okay, so that's how we do. We have a lot of webinars on and off as well. Every webinar we do have training rewards on and off. We do have campaigns like CNY campaigns where we give out input points as well. So do check them out. You can follow us on our Facebook and Instagram to get all the information. Okay, so lastly, before I go to the live demo, lastly, the most important thing is to do your portfolio management. Okay, can I check your understanding again? Do you think it's better to put every egg in one basket, or you separate it out and put it in different locations? Separate out. Okay, who thinks that it's this one all in one basket better? Raise your hand. No one? Oh, you spoiled the market. Okay, yes. So who thinks that you separate out is better? Raise out your hand. Yeah. Okay, so separate out is better, especially in terms of trading, because you won't be affected by just one stock. So separate out according to counters and according to industry tests. Okay, and then separate out evenly. You don't put too much on one stock so that you won't be affected by just one stock. If the stock or the industry goes down, like tech stocks suddenly go down, you won't be affected so much if you separate out your risk. So this is one of the ways to make your risk management. Okay. Okay, so you want to answer yes?
Why in one basket you have to stick egg, while when you separate it, you can buy?
I will add one more egg later on. I ate already. I'm so hungry. Okay, so thank you for your attention. Let's go for the case study today. I prepared StormNet for you to look into the graph itself. So this is the MQ trader system. If you have been inactive, you just want to log in. With this E-Trade, you can also have live quote data on the prices, and also up to 10 market caps. This is buying signals. Okay, I changed the display. Buying signals here or sell signals, and then the market caps here. You can get up to 10 market caps depending on the packages that you have. Okay. So we go to StormNet here. But before I go to the stock itself, I just let you see where the screener is. So you can go to market and then screener, and then you go to daily trading signal to get the signals that is generated today, the list of signals that is generated today. So for today, you can see there's a few as well. Every day actually there's a trading signal, so you have to analyze yourself. This is just a reference point. Okay, so this is how you get the signals. So let's go to StormNet today. Okay, I just want to show you an obvious example for our session today. So remember, the first step is overall trend. So one thing you want to check is overall chart patterns and also I3 investor. Okay, let's search for StormNet. Then you can see all the information here as well. Market depth here as well. To search for the news, you can go for this part. And you can see the latest news. So you can see in general, the latest news about StormNet is positive. So this is the first idea, positive. Okay, so it's worth for us to look into. Okay, then we go to MQ Trader. Search for StormNet, and then you go to fundamental analysis. You can use this shortcut here or use the menu button here. Then you can search for it. So do you remember our benchmark? Is this considered good or bad?
Okay.
Okay, yeah. Okay, stop. Not so good, but not too bad as well. So it's okay. It is above our benchmark of 2.5. Yes. And if you want to look at the financials, it's quite interesting. You can look at annual financial ratings, financial report data, and also quarterly as well. So what happens here after I apply some research is that they actually venture into new sector, medical sector. Stocknet is actually a cable company, cable making company, manufacturers. So here they start to venture into medical cables, cables for medical equipment. It is a new venture, and so at the very beginning it was losing, and they are having 20% only. So at this point of time, they start earning, and then they decide to buy over the remaining 80% of the shares. So they start to fly up high in their profit as well. So this is a typical growing stock that we want to look at, a typical good growing stock, because once they make their decisions, it actually turns out well in their financial reports as well. Okay, so this is what the stock, one of the stocks that we want to look at. It checks our fundamental ratings, fundamental analysis as well. So next, what's the next step? Can anyone tell me? OF T. The T stands for technical. Okay, so we go for technical ratings. Then it's also, okay, so today it is coming down a bit. The trend is slightly losing their momentum. Before this is actually 3. Okay, so it's considered still at the very average. And when we look at the chart itself, I like to use Heikin-Ashi, which shows all the trend line. You can see that it's actually above the trend line. Short term is the blue color one. The long term one is the red color one. So the blue color one, the short term is above the red color one, the long term average. Short term is above long term average. So the trend is good as well. So currently the technical trend is good as well. It's losing momentum, so maybe we can have a look, keep it on our watch list, and then wait for the momentum to come back up. Okay, so I just want to show you some back tested results previously on the stock with this trend. Okay, we go for Turtle system. You can see, remember the chart on the Heikin-Ashi, they break up here as well. So here also it shows Turtle system and Turtle signals. And then we search for 55. Turtle 20 and Turtle 55, the main difference is they use longer average. So they use 55 days average, one is used 20 days average. Okay, so it will show slightly slower result, but it's more complex result. So it's here. Okay, and then there's a buy signal here as well. You can search out for MQ volume breakout as well. And that's again, it confirms the signals here. So once we run back test, it will deduct one back test credit. Then you can see that the back test result is okay as well. It's considered okay as well. Okay, so this is a stock that you want to look at. This is a stock that we want to put in our watch list, and if possible, we want to look out for more trading signals, and then we can go in. So the highest return rate is on T7 based on this signal, and we'll check that these signals actually coincide with other signals as well. Back previously on the signal part. Okay, so it coincides with other signals. We will see what happens if we follow the signals back there. Okay, it checks all our report, checks all our steps, and then this is what happens if you follow the backtest result. The backtest result shows T7 has the highest success rate and also has the highest return rate. And if you follow it here, you get a 5.13% profit. If you follow it here, you get a 4.69 profit. And in total, I calculate based on 20,000. Okay, 20,000 capital, and then you get about 10% profit. So this is how you can use MQ trading signals and also backtest result to secure your capital so that you can find good trading opportunities and with lesser risk. And here's how it goes when you have good strong trend and good strong signals. If you follow through the signals and the sales, you only sell at sell signal, not the backtest result. And this time you sell at sell signal, you can get about 28% profit. Okay, but the main thing here is if you want to follow backtest result, you follow through backtest result. If you want to follow through the sell signal, you follow the sell signal. So you don't change between the strategy. So because we won't know whether when it hits the backtest result, you put down up, okay, or when the sell signal will come out. So if you choose one strategy to follow, then you just follow the plan. And another thing is, if a sell signal of the strategy that you follow comes out before the backtest result, you follow the sell signal. Because the sell signal is a cut loss point, is a way to stop your losses and also keep your risk to the minimum. We are not saying that you don't have risk if you follow this plan, but you have a minimum risk. Okay, so if you follow the backtest, within the backtest result, it shows sell signal, sell it as well. For example, just now T7, right? If the backtest signal shows in T3, then you sell at T3. You don't follow the backtest signal anymore. So if that's how you can protect your capital. So here's another example. Yuan, recent hot stock. Not sure if you have heard before. Anyone heard of the stock before? No? Yesterday. Yes, it's recent hot stock. So we will look for Yuan. It's an oil and gas refining company. Then we look for news blog. Okay, one thing here with market depth is that you can see how much buy volume and how much sell volume. This is to check out the supply and demand at the first glance on the overall trend. So if there are more selling, more people queue to sell, most probably the stock will be going down as well because there's more people selling than buying. Okay? The supply is more than demand, the price is most probably going down. So this gives us a red flag here. And then we check on the news and blogs. Recently, it's have a mixed result. Okay, it shows good profit, but some analysts have given warning signs on the counter as well. So overall trend is a mixed result. We keep that in mind. This is our first step. Basically, this if a mixed result is considered not so well. Okay, I personally will keep it aside. So you look for again here. Go for fundamental analysis. It shows 1.6. It's considered good or bad based on our strategy. Okay. So it is a stock that we want to avoid. And when we look into their financial, sometimes they are earning, sometimes they are not. So this stock is actually a typical cyclical stock. What we call cyclical is because sometimes at some point they will earn, at some point they will lose, and then they earn back, and lose back. So they are going through a cycle like that. Okay, if you look at the quarter report, it will be more obvious. Up, down, up, down, up, down. And that's why it doesn't fit our category because we want a consistently winning trade. We want a consistent profiting company as well. So based on our strategy, we want to avoid this kind of company. This company is good, okay? Just that it doesn't fit to our way of trading or our strategy.
This company is good.
This company is good, yeah. The management is because it's oil and gas, right? They fluctuate according to oil price as well. Yeah. So if the oil goes down, their profit will sure go down. But their management wise is okay. It's good. Yeah. But then they fluctuate a lot in terms of profits, and their share price goes according to their profits and loss as well. Very much. And so once they lost, their price will shoot down and then they go out, the price will go up as well. And this is the stock that we want to avoid because we wouldn't know the next profit is going down or up. Okay, although there's a cycle, but we wouldn't know at which point is the peak and which point is the lowest. So we want to avoid this kind of pattern because it's not consistently profiting. Okay, when we run the technical analysis, it's also not so good trend currently. Our benchmark is 3 and it's below it. we look at the chart and we check for the trend line, it is actually shooting down currently. So again, this is a warning sign for us. On the third step, we would want to avoid it. Okay. And you can actually see very clearly here, if I wait longer, you see it's a cyclical, go up, down. And if you compare it with the financial report, it coincides with the financial report. Here is where the profit, here is where they start to lose again. Okay? So this is not a consistently going up counter, and this is the stop that you want to avoid. If you run a back test based on this kind of result, it is quite confirmed that the back test result will be good as well, because it doesn't show a consistent profit. It doesn't show a consistent winning trade. So the back test result is 0.6. It used a lot of data, 90 data. So the more data, the less it will be affected by any extremes. So this is the quantitative data that we want to get. Okay, so this is not so good back test result. And I've done the calculation as usual. Getting back to the 4 steps, it doesn't meet our 4 steps at all. And if you follow through the signals, you will have a total profit of about 15% loss, total loss of 15%. Okay, because this doesn't fit our strategy. I'm not saying that you cannot follow. Okay, if you want to follow, you can always follow, but based on our strategy, this is not a strategy, this is not a stock that we want to get. Okay, so this is how you can actually use our strategy in your trading journey to find good opportunities consistently. So in short, the 4 steps are overall trend, then do their fundamental analysis, technical analysis, and lastly, signal and back testing, OFTS. Okay, so here's the benefits. Just to let you know our benefits as MQ members. So if you are MQ members, do take note on anything that you've missed out. If you're not, I hope this will help you make your decisions as well. So we have other systems other than the MQ Trader Stock Analysis tool. We have MQ Marketplace, affiliate program, MQ Dummy, and MQ Event. All these are free for our MQ members to use. For MQ members, you can also take a picture of this slide so that you can refer back in the future. These are free for you to use as long as you have an MQ account. So for MQ affiliate, I just want to highlight, you can get attractive and recurring rewards every time your referral trades. There's no limit for this, and there's no expiry date for the points that you get, for the coins or rewards that you get when your friend trades. And here's our marketplace. The merchandise that we have is Shopee vouchers. You can redeem using your MQ points. Shopee vouchers, MQ merchandise, our mugs, our calendars, all are up in our marketplace. And what's new today is our calendar, which is Selling Fast calendar for 2023. It is made by our own team, and then we have limited amount of it. So if you are interested, for MQ members, do check it out in our marketplace and redeem it as soon as possible. For non-MQ members, we have extra rewards for account opening. So your account opening with our selected advertiser is free. You get MQ t-shirts after you do 5 trades in your account, regardless of your amount of trades. And then you get free share transfer from another broker, and also free portfolio integration with iTrade Investor. So if you're interested, you can check them out in our booth later. For M equities, our selected advertiser is M equities and TA securities. So for today only, if you open a trading account with any of 2 of them, then you will get a calendar as a gift. And what's more is M equities is having this campaign for Singapore market, so you can check them out with the products that they provide. And lastly is remember to like and follow us on iTrade Investor, MQ Chat, and also our Facebook account as well. And today's takeaway is these 4 steps that we have brought to you, OFTS. Okay, overall trend, fundamental analysis, technical analysis, signal back testing, OFTS. I just want to highlight my disclaimer. All the stocks that I've used today is solely for educational and informational purpose. You have to make your decisions, you have to make your own research if you want to make any decisions further. Thank you for listening me through this session. Thank you once again for your attention. Now, let's invite our guest speaker, Kar Yong, to share with us on Heikin-Ashi strategy. So, Kar Yong.
Yeah.
Ah.
Okay, good evening. Just quick check. How many of you are actively trading the stock market? Malaysia. Not everyone. Okay. How many of you are investing in Malaysia market? Okay, investing. So this week, not bad, huh? Everyone make money, right? You know, you look excited and happy with the market going up. Okay. How many of you invested or trading, investing and trading in overseas market like US or even let's say Singapore? Very, very good. Okay. So today, just now we talked about Malaysia market, right? So right now I'm actually going to introduce to you overseas market, mainly the US market, as well as the German DAX, which is actually what we call the European market. Right? Any one of you actually know the major difference between Malaysian local stock market and US market? Anyone? Very shy. Okay. The main difference is if you go back all the way to the very first data that you can get from the market, okay, look at all the way back in the history of price, and where we are today, you will actually realize that US and even the European market has actually rallied since then. Okay? And the challenge in the Malaysian market is it went up, but it doesn't go up a lot. Okay, so if today you are someone who says that I don't want to do a lot of trading, you know, I don't like to sit in front of a computer, I just want to put some money and then let the money grow, it's actually much more profitable if you just put your money in overseas market. Yeah. So today, I will share with you some of the ways and opportunities in which you can start engaging in the US market as well as the European market, which is the German DAX. And today's method over here, we'll be talking about Heikin-Ashi. How many of you heard of this name? Okay, again, very good. Those that never hear before that is a good learning point for you and an opportunity as well. Yeah. So today, very quickly, let me check if I included some info about myself. If not, then I'll talk about it. Okay. So I'm gonna go through like what we're gonna cover first, right? For me, every time I do sharing, one of the main challenges is time. Okay, because to be honest, to condense all my experience and what I want to share in 1 hour or even less is fairly challenging. Okay, and I just want you to know that just by sitting there listening for 1-2 hours doesn't mean it's gonna make you a very profitable trader or investor. Yeah, it takes more than that. Okay, but today is actually a starting point because we acquire that important knowledge first. Okay, so today we're gonna talk about what is Heikin-Ashi. For those of you who are very new to that, which is most of you, we're gonna talk about how you can use this to trade the indices, which is basically the S&P 500, okay, which is the US market, and then the DAX, DAX, which is the German DAX, and that represents the European market. And I'm gonna highlight why now is actually the best time to be looking at indices. Okay. In fact, if you look at it like earlier, like last week, you will probably also benefit from the recent rally, right? So the Malaysia market rally, a lot of people credited because we have settled with our election and things like that, things become safer, more certain, more stable, and then the market rally. It's good, okay? But if you actually take a look at the US market, it rallies even more. Okay? So that's the nature and the characteristics of it. Okay? So if today you have both, okay, so you actually invest and trade the local market, but at the same time you have exposure in the overseas market, then you can actually have the benefits of both, right? So the question is, who is this for? Of course, just I asked, like whether you are invested or you're actively trading. I think today will help you a little bit. If today you're brand new, again, it'll be a very good opportunity for you to learn something. But so very quickly about me, right? I mean, perhaps some of you have heard some of my sharing before. Some of you first time seeing me. The first impression I always got from the people who first met me is, Kar Yong, you look very young. Then maybe subconsciously they never say that, but probably they've been like thinking, right? You're so young, you sure you know what you're talking about? Right? I look young, but I'm actually not that young. Okay, a baby face. Okay. I'm actually 31 this year. My experience in trading is, financial market. I got exposed to it since 2012. Very specific is in June. And the first financial instrument that I got in touch with is actually not the stock market. It's actually the currency market, which in Malaysia, depending on which side of it you are, some people say that it's illegal. Some people say it's okay. But as long as I think overall in the financial market, there are ways to make money. Right? So I started in 2012, not thinking of like, oh, I want to be a trader and then therefore I go into the market, right? I started with wanting to make some extra money. And then I just went online and Google how to make money online. Then back then in 2012, it was this thing called copy trading, which basically means you allocate some money and you follow someone, and then if that person make money, then you also make money. If the person lose money, then you sway like bad luck. Okay. So my journey was the first 3 months I made money, which is great. Because if not, I wouldn't be here. Because then I would have concluded that okay, copy trading cannot make money, it's a scam. Trading, financial market is a scam. Then I won't be here today. Okay. But my first experience was wow, profitable. Okay. But after that, I lose everything that I made in the first 3 months. Not my problem, but again, because I copied someone, that person's fault, I lose everything. But I've experienced both sides of trading, right? The financial market, I see that, hey, you can make money, but at the same time, you can also lose money. That got me very, very interested because it's something that you don't need to work, right? You just click a few buttons and then ka-ching, ka-ching. So I actually very, very interested in it, and that's where I start my journey. And since then until today, I've tried many different methods. I think just now there was an introduction to fundamental analysis. There's an introduction to technical analysis, right? But I just want to also let you know, beyond this two, which is very common method and approach to the market, there are way more than that, right? I'm not sure you've heard of this thing called macro analysis, which is looking at a big picture within the financial world. And then there's this thing called, very interesting, called seasonal analysis, okay, which is basically if you like durian, you have durian seasons, right? If you are in Malaysia, I think we know now it's the raining season. In the financial market, there are seasons as well. Okay, probably in the stock market, you heard about this thing called Christmas rally, which is coming soon, right? In gold market, if you're actually investing and trading gold, there's also that gold season. Right? So very interesting part that you can actually look into the market as well. Okay, and of course, everyone goes through this process. I lose $20,000 US in one of my biggest loss. Okay, and how I actually lost it is because I did not manage risk. Okay, basically I buy, the market went down, I buy, the market went down, I buy some more, I buy bigger. Then at one point in time, I don't have enough money already, so that whole account gone. Okay, so I learned it through a $20,000 lessons, right? And hopefully, again, I always highlight, through what I've shared, what I've experienced. You don't need to walk through that painful journey, right? So that's the whole idea of it. I turned full time in 2015, and since then I've been actively trading and investing in the FX market, in the commodities market. in the US stock market, more towards investing, as well as the Malaysia market a little bit, right? Malaysia, I should have a bit because it's still local, right? But most of my funds are all outside. And then cryptocurrencies, I touch a little bit, okay? But more of trading, not so much of investing. So how many of you are into crypto? Also have. Okay. So just be very careful with cryptocurrencies. And then I actually enjoy connecting and sharing what I've learned. I always say that I'm not a teacher or guru or whoever it is. I'm just someone who have actually experience in the market, and I enjoy sharing what I've learned, what I know with you guys. Yeah, so that's the objective of today as well. These are just some of the photos of some of the events that I have. Hey, this is before COVID. Then of course right now we're seeing a little bit more physical event, which is great, right? Of course we can connect. So let's get started by first understanding Heikin-Ashi. Okay, I think from the name itself, roughly you know it's from Japan. Okay, in fact, a lot of technical charting comes from Japan. Okay, like your candlesticks actually comes from Japan as well. So Heikin-Ashi, if you kind of understand it in the Japanese word, okay, it means the average pace of price. Okay, so it actually studies, Heikin-Ashi studies, just from the name itself, how fast or how slow the price moves. Okay, so that's the pace of price. Okay, so it looks kind of similar to your candlestick chart, but there is slight difference. Okay, the formula to calculate is very different. I mean, candlestick is quite straightforward. What the data show us is the opening price, the closing price, the highest price, and the lowest price. Right? Heikin-Ashi doesn't have that. It's slightly different, right? So in a way, in the next few slides, I'll share a little bit more with you so you understand it. Now, I'll just put two charts side by side so you can see a very quick comparison. On the left is your traditional candlestick, and then on the right is your Heikin-Ashi. They look similar in terms of the overall direction. It makes sense because they are basically price movement. But one key difference I think you can see is that the right-hand side Heikin-Ashi chart, the color looks neater. Okay, the candlestick seems to sometimes change quite frequently, right? Re-rate, re-rate, re-rate. But in Heikin-Ashi, you kind of see nicer, like consecutive green candles or consecutive red candles. Right? So that's the main difference. The other part here that you need to also understand is you cannot just use Heikin-Ashi and trade. Why? Because the opening price of a Heikin-Ashi candle is not your actual market price. Okay, the formula is different. So you realize on the screen there, right? The opening of the candle is not the closing of the candle. It's actually at the middle of it, right? So that's how the formula calculates. So of course, you don't need to go and calculate and learn the formula, but you just need to understand the difference of it, okay? Then maximize the usage of it, yeah? So this is where it differs, okay? The formula it uses is very different as well, right? So it basically calculates the average of the price, and then it opens at the middle, which is the average. Okay? But one thing is the same, the highest price and the lowest price of the candle is the same as your candlestick. It's just that the opening and the closing is different. Okay. And another unique thing that you can see is, as I mentioned just now, right? It tends to be consistent in the color. Like here, you can see a string of green, and then of course, as it's coming down, there's a string of red. But it doesn't mean that on the actual price is coming down all the time. Okay. I just want you to know, Heikin-Ashi doesn't show you price directly. Okay, it goes through a formula to show you the chart. But the benefit of that, of course, is that it allows you to very quickly identify the overall trend. Okay? Now, in trading, in investing, there's two things you need to get it right. Okay, if today you're going to make money in trading, there's two things you need to get it right. You all know what it is. What are the two things? If today you're going to make money in trading, what are the two things you get it right? Direction. And then the other one?
Selling at the highest, buying at lowest.
Okay, very specific. But it's actually related to time, right? because you want to buy at the highest and you want to sell it. So sell at the highest and then buy at the lowest. It relates to timing, right? You need to catch at the right time. You need to enter the trade at the right time. You need to exit the trade at the right time. Okay, so if you want to make money in the market, you need to get this thing right. Timing and direction. Okay. A lot of times you have many different methods to analyze the market, but if you go back to the fundamentals, the core of it, your method essentially is to tell you, do you want to buy or do you want to sell, which is the direction. Do you buy now, do you sell now, which price to buy, which price to get out, it's timing. Okay? So if you go down to the real core and fundamental foundations of trading, it's really about getting direction and time. Okay? So Heikin-Ashi allows us to identify the trend very clearly, very easily. Okay, so of course there are more than that. There are more methods to use to identify trend, but Heikin-Ashi is one of the very effective ways. Now Heikin-Ashi can also tell us the strength of the trend. Right? So for example, if today, right, prices are going up, it has went up for some time already, and eventually it will slow down. Right? And you don't want to be the last person to be buying. Not so nice to see the last sucker to get into the market. Right? It's like everyone who wants to buy has already buy, and then you suddenly speak, wow, I'm the last one, I also want to buy. Then you buy, then everyone sells. Then the price comes down, then you be the last person who got in and you stuck at the top. Right? So you also need to identify the strength. Is it the momentum? Is it still there? Or is it too late? You want to wait a while and things like that, right? So that's the strength of it. Okay. So you realize timing is not here yet, right? This is all about direction. Do you buy or do you sell, right? The trend direction. So Heikin-Ashi, if you look at it, green candle with no shadow at the bottom. That means there's no wick. Okay, let me go back to the chart here, right? You can see this, right? There's no little bottom arrow, little line, right? We call that the shadow and the wick. When there's no shadow or wick or green candle, it means that it's a very strong uptrend. Okay? And then of course the opposite is true. If the red candle at the top, there's no little shadow, there's no line, it means that it's a very strong downtrend. Okay? If there's a lot of line up and down, then it means that, okay, the trend, the momentum, the strength is weak. Can follow up now? Okay, so quite straightforward. Okay, strong, this one not so strong. Can follow, right? So this one here, all not strong in the strength. Means that it's green, the price is going up, but it's very weak. You can see it very slow. Okay, so opposite is true. If it's coming down at the top, there's no line, there's no wick, it's a strong downtrend. Okay? So this is the beauty of Heikin-Ashi, very straightforward. Now, if today you want to trade with it, right? So you then utilize a little bit of this understanding. A green candle means you don't want to be going selling it, right? When things are going up, you don't sell. When things are coming down, you don't buy. Yes, you want to catch the very bottom, but to be honest, in trading, nobody will know where's the bottom, nobody will know where's the top. If you look back in hindsight, it's easy. But if you are trading, it's never that easy. Right? But the beauty and the good news for you is you don't need to catch the very bottom, you don't need to catch the very top. You just need to catch the between of it, and then you're getting money. Okay? So the idea of this is when the candle is red, you don't go and buy, you don't go and try and say, oh, it's gonna turn, let's buy here. You're gonna trap yourself in that down move, right? Same in the up. So what you want to do is today use Heikin-Ashi to guide you a little bit. If you want to buy, you must at least see a green candle. Okay? If today you want to sell, at least see a red candle. Okay? So this one here is telling you this thing. So if today the candle of Heikin-Ashi is getting smaller and smaller, and you start to see a lot of up and down shadows, it means that the trend is weakening. So if you have a buy trade, you might want to maybe exit or be prepared to exit. If you have a sell trade and you see similar weakening of strength, be prepared to exit the trade. Or the opposite can be true, right? If you start to see, oh, it's red, and then there's this little small body, up shadow, down shadow, you know the down move is weakening, you can get ready to get in and buy. Okay, so you utilize it on both sides, yeah? Okay, now we talk about the beauty of it. Of course, every method has its weakness. Okay, so let's also understand a little bit of the limitation of it. Now, Heikin-Ashi is not best used for short term. short term is what? Short term means today you sit in front of a computer, spend 2 hours looking at your screen, trying to trade. That is what I call short term. Okay, if today you are, in fact, I would say most of us are probably also having our life. If you are doing full-time trading, sitting in front of a computer 8 hours a day, that's called no life. Right? So we all have a life, meaning beyond trading, you have something else that you enjoy doing, right? Whether it's just spending time doing things you like, whether spending time with your family and things, you have something else to do, right? So if you are in that category, you are not a short-term trader, okay? You are more of a swing trader or even an investor, okay? So for example, like me, I do most of my analysis and trading decision at the start of the day, and after that it's done. Okay, I don't really trade anymore, I just monitor. That's about it. So those are what we call swing trading. Right? And if you're looking at swing trading, Heikin-Ashi fits your style. Okay. So what are the time frames we usually look at? Usually we look at it from a daily to 4-hour chart perspective, which means every day you get one data point. That's what daily chart means. Yeah. So another thing you need to know, of course, is just like I mentioned, it doesn't reflect the actual price. Right? So a lot of times traders see Heikin-Ashi as an indicator, not a chart. It's an indicator because it doesn't reflect the actual price. Right? So these are some of the limitations. As I mentioned that, right? So from here, that is Heikin-Ashi chart. Okay, so of course, you can use Heikin-Ashi chart and apply this chart on any instrument. If you trade gold, you can apply it on gold. If you trade the Malaysia KLCI, you can apply that as well. If you trade currencies, you can do that as well. You trade commodities, you can do that. Today, we'll touch on indices, which is the US and the German DAX. Okay? So why this two? And why today I want to highlight it, share with you a little bit more about indices, because that's where if today you want to expand beyond the Malaysia market, this is a good start. Okay? So the unique thing about stock market is that if you stretch it long enough, it will always go up. But I cannot say that for the Malaysia market. Okay? I can only say that with 100% confidence. Okay? For US and the German DAX, it will always go up. Now, if you understand the fundamentals of the stock market and you understand the fundamentals of our currency market, you will know why equities will always go up. Number one, the value of our money is always falling. Okay, if you look back 10 years ago, 1 cup of Heikin, and now 1 cup of Heikin, the price is definitely increased. Make sense? 10 years later, you think you can still get today's price? No. Why? Because our value of money is always dropping. Now you look at it from another perspective now. A stock market, okay? What is it being priced in? It's always priced in that particular currency. So if you're looking at the US market, it's priced in US dollar. If you're looking at Malaysia, it's priced in ringgit. If you look in German DAX, it's priced in euro. So every equities market is priced in a currency. And we know the value of the money is always dropping. So if the value of the money drops, the value of the company will always go up. Because money drops. $1 now can buy less, you need more money, and therefore the price goes up. You understand, right? So you just think of it as today, if you can invest in Heikin, you invest in Heikin. 10 years later, you should make money. That's the whole logic of it. Yeah. So this part here, that's about the indices. Now, most movement comes from the opening. I think if today you look at if you trade and invest in the Malaysia market, you know, right? That's the unique characteristic about equities. Usually, the opening bell is where most movement comes, right? So this is just to illustrate the point. Okay, this is all the way back in 1872. I'm not even born. Okay. If you stretch it long enough, yes, we do have some major crashes, you know, like this one is the Great Depression, we have like the dot-com bubble, we have the 1997 financial crisis. But if you look at this whole year, all those crises is small in the grand scheme of things. Because if you can go back in time and invest here, everyone will want that. Make sense? Because it's definitely going to go up. Now we are here. Do you think 100 years later, if we come back and look at the S&P chart, will it likely look like that? Yes, unless we say the US collapse. By then, you also don't need to worry about your investment. You need to worry about bigger things in life already. Okay? So, as of now, we are still talking about US being the superpower in the world. Okay? This is still the biggest stock market in the world. 10 years later, 20 years later, it's still going to go up. Okay? Now, what does it mean? Does it mean that you just buy and hold? Yes, if you have that patience to do it, you have the character, the personality to do that, yes, it works. But of course, is there a more effective way to do it? Yeah, the answer is yes, right? I mean, if you buy and hold, it's just like what we call dollar cost averaging. Okay? It works for the equities market, but it's not very effective because if today the price is going up at a high point, you buy less, right? If the market comes down, the price at a lower point, you buy it to buy more. Okay? So dollar cost averaging is not the best way. It's what we call a lazy way to do things, but it works. Okay? So today we're going to cover beyond that. What are some of the methods you can use to time the market a little bit? Okay, so this is the German DAX, same thing, right? You stretch it long enough, it's going up. So over here, if you look at conservative approach, you only focus on buy. Okay, because today you want it to be safe. Okay, you know that long term is going to go up, even if you don't time it correctly. You buy at the wrong time, you know that you are safe because time is on your side. Next year, 2 years later, it's going to go up. Make sense? Okay. So a very safe approach is just focus on buy. So the direction is clear. Don't think about selling, just think about buying as a start, right? Obviously, if you have experience, you can do buy. Okay. So this is a very conservative approach, and to get things started, don't trade with leverage. Okay. Now in Malaysian market, maybe to gain access to leverage is not so easy. Okay, but in the overseas market, if you trade maybe currencies, you trade indices, you trade commodities, leverage is fairly easy to be obtained. Okay, a lot of platforms provide you that. So what you want to do is, if today you're very new, you're very safe, you want to be safe, don't trade with leverage. Okay, so this one is a guideline. So for example, if today you need $1,000, okay, and you cut deficit, you fund your account with $1,000, don't trade more than 0.01. So what this means is that even if you get in at the wrong time, because you don't leverage, if the market price drop, you will survive that drop. You won't burn your account. You won't go like what we call margin call. I'll lose my $20,000. Okay? So this is a very safe approach. It's always easier said than done. Because if you start to skip profit, you will turn greedy. Greedy. Those who trade, you know. It's always easier said than done. But you still need to do it, okay? You still need to be disciplined. So this is the whole idea of it. Just to give you some perspective, okay? If today you enter 0.01 lot, 1 point is about 10 cents. Okay? Of course, the market is not going to move 1 point, 1 point, 1 point each day, right? It's going to move maybe about 100 points or sometimes maybe more, okay? So that becomes your profit potential. Okay? The bigger you trade, obviously, the more money you're going to make up. But at the same time, the more risk you're going to have to take. So this is just giving you some perspective, right? So what we then want to also combine, just now we talk about direction, okay? Heikin-Ashi does give you a little bit of that. What we want to then now combine is the timing element, okay? Over here, I'm going to share with you this concept is actually derived from this person called Dima, okay? He has this very complex way of analyzing, but we're going to take one part of it called the time sequential principle. Okay, it sounds very fancy, but the logic is very simple. Okay, over here, if there is a specific condition where the market drops for consecutive 9 days, there's a good chance the market will bounce and U-turn. Okay, not 100%, a good chance. Okay, and the opposite is true. If the market goes up for consecutive 9 days, there's a good chance it's going to U-turn. Okay, so this gives you a sense of timing, right? And today, if you want to focus on buy, then just focus on down, right? If it comes down 9 days, you know, get ready, there's a good chance it bounce. Okay, so that's the time principle. So over here, you know, with a little bit of coding and things like that, you can actually have something like this. Okay? So that's just to show you a visual perspective, right? So like here, down, 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 you get a buy signal. Okay, up, you get a sell signal. Okay, so that's the whole idea about it. So if you start to combine all this together, okay, let me go through the bit here, right? So if you combine the Heikin-Ashi as well as a little bit of the timing factor, what we want to then do is if we have a buy signal which is down, 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 9 consecutive days, get ready to buy. We want what we call a confirmation from the trend. We use Heikin-Ashi. We want to see at least the doji. Doji means a small body, high and bottom, up and bottom. You have that middle weak. Okay, so it means what? Trend is weakening. It's not strong. There's a reversal coming from Heikin-Ashi, right? Or if you need to buy, you wait for the green Heikin-Ashi. That becomes your confirmation, your timing to get in. Yeah. So over here, how to get in? A simple technique will do. Okay, don't need overcomplicate and fancy stuff. You place an entry order if the market breaks that day high. Where you put your protective stop, you can use it from the previous swing low. Okay, and I'll show you some examples. Yeah. So this one here we focus on buy only, right? Because we're being conservative. Okay. So the opposite is true, but of course, today the revenue focus on one direction first. Okay, and you're getting more experience. You can do both sides. Okay, so let me see if I have a chart. We'll show you on the platform. Okay, I don't have it here. Let me show you the platform. Okay, so let me show you on BC Class how you can get it, right? So of course you need to register for an account. If you need more assistance on this, later they have a booth behind when you get your account registered. I'm gonna sign into mine. Okay, give me a while, yeah. Okay, so it's just like any other charting platform. What we can do is we can go over to, okay, I have already the watch list, but what we can do is go over to the market under indices. Okay, you can of course see there are many, but of course today's focus is German DAX and S&P 500, right? So if you take a look at it over here, GER30, that's your German DAX, and then at the bottom, US 500, that's your S&P 500. Okay. So now, if let's say we just look at US S&P, okay, you click onto it, you open up the chart. At the top, okay, basically you want to focus on the daily because we are not looking at a 1 minute or 5 minutes. And this is your typical candlestick. Okay, so what you can do over here, you can see this on the left. You want to change it to a Heikin-Ashi chart. Okay, so when you change that, you realize the candle looks different already. Okay. So over here, you can see these are green means uptrend. Okay, red means weakening. A lot of it is weakening. Okay, so if you look at where we are right now, this is green. Okay, so if today you want to get involved in the buy, where do you put your entry? You place it at the top of the highest point of today's price. What it means is that you don't get in now. But what you want to do is you tell the platform, tell the account broker, right? If the price breaks that high, I want to get in. If the price don't break that high, I don't get it. Okay, so this is what we call a buy stop order. I'm not sure in the Malaysian market you can do something like that, but in the US market you can do it. Okay, so you set certain conditions. It needs to meet the condition before you enter that trade. Okay, then your stop, where can you place it? If today you don't leverage and you're very comfortable to look at a long-term perspective, you can don't put a stop. Okay, why? Because if it comes down, you didn't leverage, it's okay, your account can survive it. Unless it goes zero. But no way an equities index can go zero. Okay. So if today you don't leverage, you don't like to take losses, you can don't put stop. But the criteria is you don't leverage. Okay. But if today you want to go a little bit on a higher risk and you want to do a little bit of leverage, you need a stop. A stop means if this trade you enter and it doesn't go in the direction that you want, you need to limit your losses. That's what we call a stop. Okay, so in this case, if you want to put a stop, you put it at a swing low. So if you look at this here, right? Let me move my cursor away. If you look at this is what we call a swing low. Okay, because from here, the market it came down, the market U-turned and went back up. So this is where we call a swing low. So you stop loss, you put it down. So far, so good? Yeah. So it's not something complex, but you realize that if you follow through this process and you focus on buy only, you will make money. Okay, I'm not saying if you put a stop loss means every time 100% you're going to make money. If it's like that, everyone will be rich. Okay, you still need to manage your risk, right? But this method is a very, very safe and conservative way to get started in the equities market in the US as well as in Germany. Yeah. So let me go back a little bit. So now, why we focus on the indices now? Like, why now? Okay. How many of you started? I don't think you all started this year, but how many of you started in COVID? Then you got interested, well, nothing to do, let's go and trade the equities market or the financial market. Nobody else. Okay, so that means you all started like very long time ago. Okay, good. I have friends who started their investing and trading journey in 2020 because COVID, right? Nothing to do, and then sometimes their work stop, so they need to find alternative ways of earning some income. Then they got involved in the market. Okay, and then in 2020, if you look back, whatever you buy, you sure make money. In 2020, you don't make money, well, you broke. Okay, because I don't know how you don't make money. Because literally every stock you buy can make money. Okay, we're not talking about those penny stocks. Okay, we're talking about solid stocks. Whatever you buy, you make money in 2020. 2021, still not too bad. Okay, if you actually look at good stocks, you can still make money fairly easy. Okay, but 2022, not easy. Okay, in fact, if today 2022, if you look at equities market and you can still make money, this net profit year to date in this kind of time, you're broke. Okay, but of course, investing is always ups and downs. Okay, so why I want to talk about this is because a lot of newer investors or traders, when they come into the market in 2020, they think that, wow, it's so easy, I just click the buy, I make money. Then this year they realize, wow, cannot. Whenever I click, it go against me. I buy, I also lose. I see it come down, I sell, I also lose. Because the market is coming down, it's not one way, right? Go down, go up, go down, come up here. So this year is where a lot of people actually burn and lose money. Okay. So why we still focus on it? Okay. The reason is because if you truly understand market cycle, there's always up and down. Okay. And what actually has a direct impact in the indices and equities market is actually, just like I mentioned, one way to look at it is from macro. Okay, the big picture. And we all know that interest rate is rising, including Malaysia, Bank of America has been increasing rates, right? But if you understand interest rate is never going to keep increasing. At one point in time, it will peak and it will come back down. And then at one point in time, it's going to bottom and it's going to go back up. So interest rate fluctuates. Okay, and same thing in the indices. While the overall trend is going up, it fluctuates up and down. Okay, so when it's at the bottom, that's a good time to start accumulating. You need to start looking for buy. When it's at a peak, then you just be a little bit more conservative. You don't so aggressive and buy. Okay, so right now, if you look at interest rates, the trend of the interest rate is still rising or coming down? Still rising, right? I mean, when it's going to peak, of course, we won't know. Okay? But I just want you to, okay, I can only share you statistically point of view, right? Because nobody will know where it's going to peak. Okay? One thing to look out for is inflation. Okay? So inflation in the US, this data calls CPI, okay, year on year. The latest that we got recently was 7.7%, which means the US inflation is 7.7%. Malaysia not that high yet, but US is 7.7. Interest rate in the US, if I'm not mistaken, I think somewhere is about 3+%. Okay. Historically, when inflation hits above 5%, these two, interest rate and inflation, the point where they meet, okay, so this is 3+, this is 7+. Okay, when at one point eventually they're going to meet, because this one will keep going up, interest rate will keep going up, right? Hiking. So this goes up, it will bring inflation down. At one point it will meet, I don't know what's the percentage, maybe 5. So inflation drops to 5, interest rate rally to 5. At that point, statistically, in a historical point of view, that's where the interest rate peaks. Which means the Federal Reserve is going to look to cut rates again. Why? Because now we're talking about maybe next year we're going to get a recession. Okay, so when we have a recession, the Fed will cut rates to help spur up the economy. Okay, so why indices? Again, because now as it's coming down, we know eventually what's going to happen. The interest rate is going to peak, it's going to cut. And when interest rate starts to drop, equities market is the one that's going to benefit the most. Okay? If you don't believe, just look back in 2020. Terrible year for everyone who does businesses. A solid year in the equities market. Why? What happened to the interest rate? Cut down super fast, right? In a very short span of time, suddenly interest rate becomes 0. Now, if you understand a bit of what it means, if today you have 0 interest rate, means today you go to the bank and say, I want to borrow 1 million. Okay, of course, not directly like that, but it literally can understand it from a perspective. I borrow 1 million from the bank, the interest is 0. Who wouldn't want that? I borrow today, I don't need to pay you any interest. I just need to make sure next time I get 1 million and return you, right? So at a very low interest environment, everyone has that urge to go and borrow money. And if today you borrow money, what's your intention? Make money, right? So what happens is you can borrow money in a very low rate, put into something that can generate a higher return, and then that's your profit. So in a very low interest environment, equities market benefits. Okay, so we are actually looking for that. Okay, and that's why indices is something you want to definitely look into. Okay, I'll give you some more statistics to help you, gain that confidence. The average bear market lasts about 290 days. Okay, so if you translate that, it's about 9.5 months to 10 months. Okay, now it's December, but the bear market didn't start at the start of the year. Okay, the bear market started somewhere around May. Okay, an official bear market is where the price drops 20%. So that actually started around May this year. So if you give yourself, an average 10 months, where do you think that will probably end? Yeah, somewhere there, March, April next year. Okay, so you still have a bit of time, right? But of course, this is average, right? It doesn't mean that, whoa, March, everything goes up. That's not how the market works, okay? But that's statistics for you, a reference point. Okay, so we're about 6 months in, right? Right now, of course, December, we can say 7 months. The bull opportunity may be coming, okay? And that's the reason why I want to share with you this opportunity. Okay, and something very interesting. A lot of times people will say, I wait until everything goes up, then I only buy. So you are in the last sucker to get. Okay, don't do that, right? So statistics again has proven that majority of the move, okay, the strongest rally has happened during a bear market or when the bear market is transiting to a bull. Okay, so what this means is that you want to be early in the market to maximize your profit. If you want to wait for, everything has officially turned into a bull market, you might still profit, but you're going to profit a little bit. okay, and you miss out most of the chunk. Okay, so what is it? You can see it here, right? Over the last 20 years, 15%, which is half of the strongest rally, actually comes in the bear market. Now, if you take a look like last week, or even just like yesterday, you know, the news is all reporting, right? Huge rally, huge rally. That is something that happened within right now, which is the bear market. Okay. Another 30% of that actually happens in the early transition of the bull. Okay. So if you actually account for all this, you realize that when the actual bull market comes, yes, it's still going up, but you don't really enjoy that kind of excitement anymore. Okay, so you need to be early in the game. Okay. This was actually taken sometime back, mid-November. Okay, so last session, yesterday, we had one of the strongest rally. Before that, 13 November, we have another strong rally. Okay, and all this are happening within a bear market. The market is still overall downtrend, but we are still seeing all this strong rally, right? So as a trader, you can capitalize on all this. Okay. So this is the part, right? The bear market may not have ended. Okay, I just want you to know, the recent rally doesn't mean that everything is done. It may still go back down, but the bear market might be done soon. Okay, so of course, if you have more knowledge about the whole economy and the macro part of the world, it helps. Okay, so if you want to capitalize on it, of course, you need to be prepared. Okay, and that's a little bit about it. Okay, before we close off this part, any question? In Malaysia, every time I do sharing, no question one. Then I always say, and I follow up with this. There's only two things it can be. One, I present so well that you fully understand everything, no question. Number two, whatever I say for the past 15 minutes, you don't understand a single thing, and you have no idea what to ask. Fair enough. So which one? I hope it's the first one. Yeah. Any question about Malaysian? Very shy. I don't know why. In other markets, they all present and want to ask. Any question? Go ahead. Sure enough. Then, yeah, not my loss if you don't have a question. Okay, good. So closing note, just very quick. This is a little bit about current market industry. Because I need to warn this because this is probably the first time you know me. Okay? And you might not know me really as a person, right? So maybe you are active on social media like Facebook, Instagram, and then suddenly you see me, my face on Facebook, slightly similar name, come and message you, and then you thought it's me. Okay? But actually that's not me. Because in today's environment, a lot of fake accounts. Okay, so I just want you to know, number one, I won't have the time to go and privately message you. Okay, even if today you follow me on social media like Facebook, Instagram, I won't privately message you. Okay, so a lot of all this fake account, people I know has already been a victim of it. Okay, these people, these fake accounts are gonna ask you for money. Okay, I don't do it. Yeah, so just want to highlight this because this is the first time we meet. I don't know if someone's going to approach you, but it's a fake account. Okay, so just highlight on that, right? I do share on social media if you want to. These are the two accounts. That's all. One on Facebook, one on Instagram. Okay, just search my full name. That's the right one. Okay. For me, I also do a regular sharing on VC Plus in terms of currency market on a weekly session, Tuesday and Thursday. The only thing is we are doing it in Mandarin right now. Okay, so maybe we'll arrange for English session in the future. But right now we're doing mainly in Mandarin. In the evening session for Tuesday and Thursday, we look at the market and then I personally share some opportunities that you can trade for the week. Okay, so again, if you'd like to find out a little bit more about this, do approach the group behind and find out a little bit more about it. Okay, and just now you saw the platform of BC Plus. If you're interested to register and open an account, it's free. Play around with it. If you need help, do approach them as well. Good. Okay, I think that's all from me. No question? Okay, go.
For the time sequential strategy, it works best with Heikin-Ashi or also with the candlestick.
It doesn't matter Heikin-Ashi or candlestick because the time sequential is just basically looking at down, 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 down. But it's in day. So you don't go apply, 9 minutes of down. You look about it needs to be on the daily perspective. Yeah. And you might want to just apply it on stock market. Yeah, because the study of that actually comes from stock market. So don't apply it on any other market.
Can you explain further on all the dimensions, the implications of 9 days up, 9 days down? Why 9 and 9?
Oh, okay. I didn't derive the magic formula of 9. It's actually from this. That's why I introduced you to a person called Dima. Right? That's his name. So according to his study, it's not 100%, but a good chance in the equities market when we see that consecutive 9 days of rally or 9 days of drop, there's a good chance the market will pause. Right? So when it pauses, there's a good chance there might be a sign of a reversal. So behind the study of it, of course, is statistics. So of course, Dimar does his work. There's a statistics to prove that there is this probability happening. You can also, of course, understand it from the perspective of psychology, right? So market psychology, where if today you fall into something and then see like 2 weeks of rally, most of the time people will what? Let's take some money out. Let's take some profit. The action of taking profit will stall price. Of course, in the equities market, if you buy today and you take profit there, that's actually selling off your position. So the market will see that as you're selling. So that creates some kind of stalling effect. So that's the gist of it. Yeah.
You know that Heikin-Ashi method, you relate it to the volume. Because if let's say the volume is very low, the signal to stand for, you need to get a higher volume.
Okay, very good question. There are generally 2 studies of Heikin-Ashi. The one that I share with you doesn't really take into volume. But I know there is there's one Heikin-Ashi study that accounts for volume. So this one that I share with you, the method is based on pace, which is they take into account the moving average, which is momentum of price. Volume is similar yet different because more volume, it creates also certain momentum. Yeah, but this one here, so we study this, we don't take into account the volume aspect. All good? Yeah, then I'll pass the tie back to the organizer.
So that's all for our event today. Remember, you can check out the books if you want to know more about the products that our selected advertiser has provided. So thank you once again for your attention here and hope you have a good day.
Thanks for watching.